Welcome guys, welcome to today's video. Today's video guys is gonna be a very simple one. It's gonna be a very chilled one. It's gonna be a few things that we need to look at in the sense of market cycles guys. So guys, please stay tuned for the whole video. I would really appreciate you guys' support in this video. And guys, if you like what I'm talking about and you like my simplistic way of explaining things, please just go down below and please go and subscribe. But we're gonna get into it right now. Today guys, we'll be talking about the three primary market cycles guys. The three primary market cycles guys, as you all know, it's an uptrend, downtrend, and consolidation, right? So understanding these cycles is crucial. It's crucial for any trader looking to have consistency. And yeah, any trader looking to have consistency in their craft, knowing how to know which cycles are best for their strategy, and so on and so forth. So guys, without any further ado, let's just jump into this video guys. Okay, firstly we're gonna talk about an uptrend. Now, an uptrend occurs when the market is experiencing an increase in traders who are buying a certain specific asset, right? During this phase, buyers are the dominators. They are buying the current asset, and the current asset is experiencing a lot of demand for it, meaning that when the demand for something goes up, the price usually goes up as well. So this is where buyers are just in the market buying all the the shares, whatever it may be. And the market sentiment is generally very positive. If we look at it overall, the market sentiment is generally of a buyer's market. People want and people are willing to put their hard-earned money into this asset, right? Buyers typically outnumber the sellers in an uptrend. Typically they do, right? And this is also true in the forex market. But in the forex market, for instance, let's take Tesla stock. As you all know, Tesla has skyrocketed to the upside, and the reason for the uptrend of the skyrocketing, pushing of the stock, is because of buyers who were more inclined to buy Tesla. And it just became such a snowball effect to the point where people bought Tesla, and when a few people or a few important people start buying a certain asset class, those people start seeing it as a better asset class and they start buying more into it. So overall, it becomes such a snowball effect to the point where everyone's just investing their money into a certain type of asset. This then occurs, and this then pushes that the stock price can go up, which entails that the buyers are more than sellers in this point. We can clearly see with Tesla. So this also holds some truth to the forex market. The forex market has the same principles, whereby buyers buy into the market, and then the pair will skyrocket or it will go up. For instance, GBP USD, as you all know, is the pound against the dollar. So if GBP USD were to experience an uptrend, that means more buyers are willing to invest their money into the pound, or they see intrinsic value into the pound rather than the dollar. This in turn makes GBP/USD to shoot up, or creating an uptrend, because more people are more invested into the pound, not the dollar, right? And this then, in a more simplistic term, shows that the pound is overpowering the dollar, which means that the pound is stronger than the dollar, which means that the pound is going to go on an uptrend. Now, we have to that's why GBP/USD will be more of a bullish sentiment market, meaning that people are more inclined to buy pound, right? Pretty simple. Now, you guys have now let's look at the downtrend. The downtrend is actually quite the opposite. The downtrend is literally the market is experiencing. Now today, guys, we'll be talking. Now the next section is the downtrend. Now the downtrend, it's quite literally the opposite of what an uptrend is. And I know a lot of you guys are watching this video saying, how stupid is this guy to be explaining this simple concepts? And I can guarantee you guys, a lot of people, myself included, did not know this stuff when I was starting out into Forex. I just knew that the market moves, right? So this video is literally for beginners, people who just got into trading, people who just got into Forex. And yeah, this is how it is. Anyways, moving forward, the downtrend is more of a, it's more of a pessimistic sentiment to the market. It's more of sellers are the dominators. It's more of sellers are more than buyers at this point. Sellers are more of a huge play, or of a huge player in the market at that point. That's why the market's value, or the market's the market's value is more of a pessimistic. It's more of negative. It's more of people are not willing to spend their money into that certain type of asset class, right? So the downtrend usually works when sellers start coming into the market, as I've stated, and then buyers are more inclined to not even enter in the market. It's literally the direct opposite, right? Sellers here, they are the dominators. They are the people who are in the market, right? If you're a seller, this is your time, right? And this holds some truth to Forex trading, and I'm going to refer it back to trading in the foreign exchange markets. For example, your USD. If your USD were to experience a certain bearish movement to the downside, we would literally look at the fact that the euro is weaker than the dollar. And then that means that more people are to invest their money into the dollar than the euro. In turn, this makes the euro much weaker, and in turn this makes the dollar much stronger. So this is where the dollar takes its place into the two pairs, and this is where the dollar will push the currency down, which will cause a bearish movement. Pretty simple. Note, and this is a clear note, there is a clear distinction between how the stock market works and how the foreign exchange market works. You should always remember that the forex market is not a specific stock, it's not a specific bond, it's not a specific options contract, it's literally two countries pegged to each other. So in the sense of they are pegged to each other to make one entity. So the rise and fall of that pair is directly correlated to the weakness or strength of the pairs of the specific pair of the specific currency in that pair. So please don't get confused. Forex trading works a little bit different, but the principles are the same. The principles of uptrends and downtrends are literally the same, just that forex trading works with countries and the stock market is an individual stock or an individual entity. So please keep that in mind and just make sure that you understand the differences. Lastly, we will be looking at the consolidation phase. Now, this is also known as sideways, range-bound market. You can go wild here, but this consolidation phase is literally where the market is not doing anything. It's literally in a range, just moving in that little range, whether at the top or at the bottom. And this is literally where the market has no clear direction where it wants to go at that certain time period. This is the cycle where either the market can break to the upside or it can break to the downside. We are not yet sure. Yet that is why it's called consolidation. It's still consolidating. It's still finding buyers and sellers into the market to try and see if we can push the price up or we can push the price down. Simply that. Meaning that price might top out at a resistance level in the range and go back down, and on the supply level in that range, and just keep on going up and down, up and down, up and down till the market has found enough sellers or enough buyers to push the market forward or to push the market to the downside. So the consolidation phase is where traders hate it, because if you are in a trade and the market starts having a consolidation phase, you can be in the trade for days, hours, it depends, but it is a very frustrating time whereby the market is still deciding where it wants to go. So this consolidation is literally where buyers and sellers are pretty equal, right? One group does not overpower the other group. They're pretty equal, meaning that there's a certain amount of buyers and there's a certain amount of sellers into the market. Preferably equal, meaning that the price of that asset class is pretty much in the middle. There's no overpowering of one asset class. So yeah, guys, that is consolidation. That is consolidation, guys. And guys, these three market phrases you should know, because they can literally help you fine-tune your strategy so that you know that I am trading when the market is in a bullish state or in a bearish state or in a consolidation state. You have to know these different types of market cycles so that you can fine-tune your strategy accordingly. Anyway, guys, this is the end of the video. Hope you guys enjoyed that little bit of beginner friendly tips. If you guys liked what you saw in this video, please just go down below. Please just go and subscribe, and guys, I will see you very soon. As I've said, if you found it helpful, it could really help me with a little bit of subscribers. Please go down below and subscribe to our channel to keep on receiving this informative, beginner friendly rules. Hope to see you on the next YouTube video.